Okay, guys, welcome back. This is 4.4 in the Debt Management Basic Series, and this is going to be on credit reports and credit scores. So these are some of the takeaways that I want you guys to get from this particular video. The most important thing is that you guys understand what goes into a credit score and where to start if you guys need to rebuild your credit. But before we begin, disclaimer: the financial information contained in this video is for informational purposes only and not for the purpose of providing specific financial advice. You should contact a financial advisor to obtain specific financial advice. Okay, guys, so this is the outline, and we are at 4.4, and we're going to talk about credit reports and scores. So let's start off with what the difference is between a credit report and a credit score. So when we're talking about a credit report is a collection of debt obligations, financial obligations, and the payment history for them. Now, a credit score is a mathematical algorithm used to determine an individual's or an organization's credit worthiness. Now, they're not the same, but they do reflect one another. So let's get into a credit report so you guys understand what a credit report is on the off chance that you don't. So when it comes to a modern day credit report, what you guys need to understand is every new credit account issued, it's going to go through a specific process. There's going to be an inquiry made on your credit worthiness, and it's either going to be a hard inquiry or a soft inquiry. So hard inquiries are going to happen when you're going to go for actual loans. So when you go for a credit card, a personal loan, an auto loan, or a mortgage, that's going to generate a hard inquiry. Any transactions that credit or loans will be issued. Now, any ones where it's not going to be issued, it's going to be a soft inquiry, and that usually doesn't affect your credit report or score. And that's going to be things for car insurance and hiring managers. Sometimes hiring managers do that, and landlords also can do that too. So this is pretty much any transaction where a payment history is established, and it's not necessarily for generating loans. So what I'm going to do now is I'm going to segment the different parts of a credit report. So let's say that they've already done a hard inquiry to your credit report. Now what's going to happen after they pull the information and receive your credit report and score, they're then going to evaluate a couple different things. Now, one of the things they're going to evaluate is the previous inquiries you've had on your credit report, seeing who has already pulled your credit report within the last 2 years. The next thing is going to be your payment history. So this is going to be how much you paid for each of your current credit obligations and if you pay them all on time. The next one is going to be credit usage. So that's going to be mainly for credit cards, and it's going to see how much credit you're using versus how much credit was extended to you. So the sum total of the credit limits. The next one is going to be the different types of debts that you have. So mortgages, student loans, the like. The next one is going to be the length of the history. And the last one is not actually going to be on the credit report, but it's very important. And that is going to be your income. So if you guys want to know where this credit report comes from, just know that there's 4 major credit reporting bureaus. The first one being TransUnion, Equifax, Experian, and FICO, also known as the Fair Isaac Corporation. Now, these are large companies that get plenty of transactions monthly. I think it's somewhere between millions to billions of transactions, just to show how individuals interact with credit. So if you guys want to know what they do, essentially they just collect information and then they issue this information to a financial institution that is looking to issue you a loan or evaluate your quote unquote credit worthiness. Now, they deliver this information in a compiled computer generated credit score based on the data. So just so you guys know, this is not so much for just your credit report because I also have income at the bottom, but just so you guys know, these are the impacts for each one of the criterias that go into your credit report and score. So the evaluation, 10% of the overall decision is made on previous inquiries. 30% of the decision is made on payment history. 35% is made on credit utilization. Okay, 10% is on types of debt, and 15% is on credit history. So 0 to 100% is on income, depending on how much income you have. So if you guys remember what I said in the last video when I was talking about different types of debt, lenders have minimum requirements that they have for lending out money to borrowers. So when it comes to each lender may have slightly different things of what they're looking for as far as lending out to a borrower. So essentially what happens is they take your credit report and score, and then they compare it to whatever internal requirements that they have. Now, if depending on the loan, they may also inquire about your income. So if they inquire about your income can, in certain cases, could make or break the application that you guys apply for. So after they've gotten all of your information, then they make the decision. So you guys have some sort of context of what goes into impacts to your credit. I took each of the requirements and then I segmented them. So at the top, we have all the things that are high impacts to your credit. So keep in mind, when it comes to your payment history and your credit utilization, that is going to account for 65% of your credit report and score. Well, 65% of how healthy your credit report is and how high your credit score is. So if you guys want to rebuild your credit, you guys have to remember that these two categories account for close to 70% of the overall report and score. So those are going to be the two areas that you're going to need to attack. Now, the next one is going to be income. Now, the reason why I have income as 0 to 100% is because if you have really bad credit, but you have a lot of income in comparison to the amount that you're going to be taking out for the loan, they can make a decision even if you have bad credit. So all the other categories are bad. They can still issue you the loan if you guys have enough income. Now, the last one are the three areas that have low impact. So that's going to be the length of your credit, and that's going to be how many hard inquiries you have and the different types of debt, and that's going to account for 35%. So when it comes to stuff like this, there's ways to rebuild your credit when you're thinking about these three areas, but a lot of these areas are actually kind of passive. So when it comes to hard inquiries, they're going to fall off of your credit report after 2 years. So that requires time. And for the length of your credit history, obviously that's going to require time too. And the different types of debt, that literally, it depends on if you get approved for different things. Now let's move over into credit scores. So a credit score is a mathematical algorithm that determines credit worthiness, quote unquote. So your credit score reflects your credit report. Essentially, what happens is it takes the different criteria that I mentioned earlier, and what it does is it actually generates a number. So this incorporates all of the info that's on your credit report, and this generally ranges somewhere between a low of 300 and a high of 680, depending on the bureau. So what I have here is I have the Fair Isaac Corporation, and this is their range when it comes to credit scores. It's going from a low of 300 to a high of 850. So all values of your credit score that go from 300 to 579, that is going to be considered very poor credit. So that's going to be about 17% of the population. So we have 580 to 669, which is considered fair credit, and that's going to be 20% of the population. And we also have 670 to 739. That's going to be people with good credit, and that is 22% of the population. So anyone who has a credit score between 740 and 799, that is really good credit, and that's going to be 18% of the population. And we have the people with excellent credit being 20% of the population, and that's going to be someone between 800 and 850. So as you guys can see, about 80% of people do not have excellent credit, and I think that's important to understand. So just understand, if you don't have excellent credit, it's okay. You're not in bad company. And now you guys have a framework of what you guys need to work on in order to improve your credit. So like I told you on the last slide, this is the Fair Isaac Corporation, but each bureau could have slightly different ratings and slightly different ranges. So now you guys know what a credit report is. You guys know how it reflects to a credit score. Let's go into how you guys are going to obtain these. So where do you go for a credit report and score? So the first place that I'm going to send you guys to is going to be annualcreditreports.com. So this site will redirect you to each one of the credit bureaus, except for FICO. So it's going to give you your TransUnion, your Equifax, and your Experian credit report. Now you can retain a copy of these credit reports free annually. So every year you guys can go and then get a copy of your credit report. But it's just the credit report. So each bureau charges for the credit score. Now, there's a couple ways around it if you guys want some sort of idea of your credit report. And the way that works would be using a third party software like a credit monitoring. So if you guys want CreditWise by CapitalOne.com and the Discover Scorecard, those have a Vantage 3.0 credit score, and that's provided to you guys free along with an aggregate report. So if you guys don't know what the term aggregate means, it means a collection. So this is a collection of three of your credit reports, and I definitely recommend you guys check that one out. So as far as credit monitoring, there's going to be one that I'm going to recommend to you called Smart Credit. When it comes to Smart Credit, I think this is actually one of the best ones that I was able to come across, mainly because it doesn't just do credit monitoring, but it also does money management, and that can be used as a money management tool. So definitely recommend that. I think that's a really good feature that this one has. And they don't just do your Vantage 3.0 credit score. They also give you a credit score that would be pulled from anyone who's offering you an auto loan, or it does have something for insurance, your insurance score. And there's also a hiring index for someone who would be like a hiring manager to you. Now you guys, if you go to smartcredit.com, sorry, I need to slow down. If you go to smartcredit.com, it's $29.95 for this, for the premium service. Also, it's about $20 for the regular service, and it's also no additional cost if you guys get the FES protection plan. So if you guys don't want to go that route, there's also another one that I would recommend, and that one is going to be by scoresense.com. And this one's going to be $39.95 per month. Typically, you have to go to the website and then tell me. And this one also comes with identity theft protection, so that's a plus there. If you guys have the FES protection plan, that comes with a LifeLock protection, and definitely recommend you guys do something like that for identity theft protection. And you guys need to make sure, if you guys do not go through a credit monitoring service that offers all 3 credit reports, that you at least get an aggregate report, mainly because each one of the credit reports can have different information on it, and having all 3 or an aggregate report that takes into account all 3 of your major credit reports, mainly because FICO doesn't offer it the same way as the other 3. That is going to be beneficial for you guys, because you may be missing something on your credit report, or there could be an error on one of your credit reports that's actually dragging it down, where if you just removed it, then you actually would have better credit. All right, guys, so that's all I have for you. I want to thank you guys for watching this video. If you guys like this, hit the thumbs up, leave a comment, and tell me what you guys think. Now, if you guys want more personal finance tutorials, subscribe. I have an initial goal of 1,000 subscribers. So anything that you guys can do to help me get there, definitely appreciate it. And that's all I have for you guys in this video. And I'll see you on the next one. Okay, guys. Well,